We've been hearing that stockbrokers are confident about the rising temperatures in the country and the fact that it will not have any adverse effect on the market specifically, with just more than a week to go. What's your feeling, or what feeling are you getting from the ground over on that end?
Well, I think the general consensus is that the new constitution is going to be ushered in after August 4. And I think the market skew is for a sharp rally. If that does happen, I could see a rally in the same quantum as we had in the first half, which was about 30%. And I think that will be fed by a feel-good factor, fed further by a sense that we've got some political closure on what happened before and we've got a new departure. Plus, I think the US is very heavily invested in a yes outcome. So I'm reasonably confident we're going to get a yes outcome. I think the market is skewed that way. We have been in a triangle pattern, Alishia, for some time, and a triangle pattern on the NSE normally signals to me a break either way, and a sharp one. So I'm hoping we're going to see a sharp break higher.
In the meantime, plenty of company news keeping things interesting. We had Safricom's share price staying pretty unchanged following the announcement of its chief executive, Michael Joseph, stepping down from the helm come November this year. Investors seeming to be pricing in minimal succession risk here.
Yes, absolutely. I think Michael is staying on for a further 2 years on the board. Mr. Collymore I actually met at the time of the IPO, so I think he's been looking at this business up close and personal for some time. He hasn't been dropped in from another planet. So I think investors, on balance, this news was in the market. We knew Michael was going to go at some point, and therefore you had this very limited price action once the announcement was made. The price did swoon earlier, Monday, Tuesday, Wednesday, before the announcement hit the screens, though.
Yep, of course, that announcement then explaining much of that movement that we saw in the earlier part of the week. So quite a bit of investor confidence in the firm's performance moving forward and the ability to actually keep that company on the same track. BAT, in the meantime, seeing strong results, but traders seeming to be pretty disappointed with the fact that no dividend was declared there.
Yes, absolutely. It's a dividend stock. It's paying. It was paying a running dividend yield of just below 7%, where T-bills are around just below 2%, and a lot of investors have bought this stock in order for the dividend payout. So I think the lack of an interim dividend was a little bit disappointing. But on fundamentals, you're looking at a forward PE of about 11. And you've had a 19% acceleration in the first half. So I think, the disappointment won't last that long.
Of course, if you look at the fundamentals of this company, a move like this was certainly not unwarranted. I mean, to bear in mind is that there was a very tough operating environment to contend with over the 2009 period, impacted by high inflation rates, increased insecurity, prolonged drought. I mean, the list is really endless here. So what's your outlook for the company as we head into this second half and for the second half as a whole?
I think second half they're going to deliver what they delivered in the first half, if not a little bit better. In fact, corporate Kenya, if you look at the results, actually were ahead of the curve, ahead of the GDP curve. They started to deliver strong profits in the teeth of what was a very weak economy last year. So actually, I can see it accelerating a little bit to around 20 to 25% second half.
Well, the proposed insurance cover on contracted farmers did bring about with it some controversy around BAT in the fact that it was against the advertising of tobacco-related products. Aly Khan, do you see this posing much of a headwind as we move forward?
No, I think, the lack of advertising is already out there. The BAT is not a big advertiser anymore. And I think, the tobacco business is a little bit Pavlovian. You have a very captive market, and I don't think the advertising side is going to hit them that hard.
In the meantime, regulators have allowed TPS Eastern Africa, which is, of course, the holding company of the Serena hotels, to raise additional capital. What have you made of this move where it's planning to raise about 1.2 billion shillings?
Absolute shoe-in. It'll be a full subscription. They've strongly rebounded in line with tourism, and they have a fabulous footprint across the East African region. And operationally, under Mr. Jan Mohammed, they've been extremely strong. So, I don't expect any surprises. I think investors will back management and will back management in particular because of this scale out. They're now in Uganda. They're looking to reverse in the Kampala Serena. It's a good story, strong operational bounce. I think there's going to be no issues around this, and the rights issue is very small, in fact.
Of course, Aly Khan, to highlight with this move that the company is making is that it is moving towards greater diversification, where they'd be looking to fill the gaps during the low season. If you look at some of the acquisitions that they're planning to make here.
Absolutely. I think they've got a very good 365-day franchise now. I mean, they're all over the region. They're not purely Kenya specific, which some people might not have liked because of what happened in 2007. They've grown, they're regional, they're very much tied to the coattails of the regional story, and they've got a very powerful brand. It's, you cannot underestimate the strength of that brand. So I'm bullish about the stock. It's returned about 91% over the last 12 months. I still think there's some more juice to be had out of this.